Hello, traders and trade pros. Welcome back to our channel. I hope you guys are excited for yet another video that we've got going on, and we're back at the desk today. In today's video, what we're going to be talking about is a different asset, an asset that I haven't necessarily talked about too much, and it's Nasdaq futures. Nasdaq futures over the last few months to like half a year have been providing amazing value, and they're known as the more volatile asset, volatile futures contract, but they're very opportunistic. They may seem to move erratically, but what I'm going to show you today is a very simple strategy to start honing and understanding Nasdaq futures and understanding the risks and volatility that come with this asset. So if you guys are excited about this, right, and excited about to learn about the movement of the Nasdaq futures and this one simple tool, one singular tool and strategy to help you understand and actually trade these better, stick around and enjoy this intro, and we're going to jump right into the video just after this. But before we do that, if you're new to the channel, please hit that like button, hit that subscribe button, and drop a comment down below. What kind of assets do you trade? What kind of futures trader are you? So we'll see you right after this intro, and let's get right into it. On the screen here, we have a chart you're probably very familiar with at TRADEPRO Academy, right? This is a volume profile based chart. Now, the Nasdaq futures, they move very erratically, realistically. First, let's give you a little intro into the Nasdaq future before we start diving into a lot of these things. The Nasdaq futures, right? They are an asset that trades 20 times the index, suggesting that every singular point movement is worth $20. Right? So that means that every tick is worth $5. That seems like a lower amount. However, the Nasdaq's trading at nearly 18,000 points, right? 17,700 or so, give or take a few handles, right? By 20, you're trading at $350,000 of notional value. That is a massive amount, right? So you're trading a lot of notional value with a smaller account or accessibility to a smaller account through brokerages, and these minute movements, right, they happen very quickly and erratically, suggesting that you have to have a larger account to actually trade Nasdaq futures. So Nasdaq futures generally, they have pretty wide movements, right? 30 to 20 points on average are like decent rotations. So that suggests that I use somewhere between a 20 and 30 point stop. Now, a 20 point stop by 20 is $400. 20 by 30 is $600 for a single stop on a single lot. Now, there are micro futures that are 1/10 of the size, suggesting that one stop in that case is $40 to $60, right? And the take profits that I'm looking for are between 40 and 70 points to begin with. So very easy to come by these very big moves, because once Nasdaq gets going, right, its swings are very drastic, making it a very opportunistic and profitable asset to trade. However, it is very erratic, and people can get lost in the sauce. They can get stopped out very quickly, especially if they have the tight stops and try to scalp this. And they can get very emotional in Nasdaq because they see the swings. They're like, oh my God, I got to get in on this. And then they bite the bullet and things go awry, right? So what I'm going to be breaking down for you guys today, as you can see on the screen, is understanding one simple tool, this volume profile complex, and understanding how to use this to your advantage to identify market reversals and a general strategy for the Nasdaq. So as is any futures asset, I trade them very similarly. You can find directionality from this volume profile and find key levels to trade, but I'm going to break it down a little further for you guys. So this strategy in trading Nasdaq, it's very centered around auction market theory or distribution theory and understanding volume and volume market participants, along with a mix of order flow, but I can get some very good generalized levels from distributions. And that's exactly what I'm going to be breaking down throughout this whole video. It's going to be in depth. So check this out. This is in our trading room in our Discord. This was last night, right? 630, 640 is a major resistance on Nasdaq that can be faded down, right? You can see where we fail on the overnight session, we drop from 630, 640 down to 480, right? We pretty much high tick this. Now, it can be faded down to see 580, 520, 510, those are the targets, right? And it would be great for the buy side to step back in and make a new high tomorrow, but I don't want this back into 440, for example, right? I wanted it a little higher into that area. So you can see, right, this is the trade. I wanted that 480 realistically, and that's what we picked up. So we take a look at this, right? These are some of the trades. NQ long, Took a little stop on the ES, but NQ long 480, right? That's it. And that's it. NQ up 200 points, target 730-ish. There we go. Now, if you guys are excited and want to learn more about this, you can check us out at TradeProAcademy.com or sit down, watch this video, and learn a lot from this. Let's dive right into it. What we have here on the screen is a volume profile with a 50-day cumulative volume profile here on the right-hand side, and each individual session profile that we have, right? So we have the extended hours trading session, the regular trading session, regular, extended hours, regular trading hours, extended, regular, extended, regular, extended, so on and so forth. So as I'm looking at this, right, you get a lot of information from this. So every single profile is attached to a TPO, right? You can go as far as understanding what the initial balances do, but let's start off with the volume profile in itself. The volume profile in each individual session creates an area that has a value area, right, which is between these two purple lines. You can see value area high and low is TPO high and low. And then you can also look at it from the perspective of individual colors, right? That's the main thing that I care about. I'll use the TPO's value area, but I like the coloring of the volume profile itself. So generally, right, what we have is the red is very low volume. It's very, very low volume. We can assume it's very, very minute volume, especially when we compare it to the point of control, which is very heavy volume. The closer you get to the colder colors, right, the heavier the volume actually is. So I only care about, like, let's say green, blue, and red, right? Because I just want to know where it's very low and where it's very heavy. So when I look at the very low volume, these are areas that happen very quickly, right? These are very, very quick moves on low volume. Generally speaking, right, these are areas that are quote unquote unfinished auctions, if you will. So with these, right, I notice where the thin volume starts and ends, right? That's one of the main things that I'd like to notice on this, right? These are very important regions for the prior sessions, the prior days, so on and so forth. But the main focus, before we dive too much into this and get lost in the sauce, is this overall larger profile, which can be divided into distributions, right? If you watch some of our videos on auction market theory and distribution theory, you can find a lot of information based on what I'm going to be going through right now. But all in all, what I'm going to be doing is finding on the cumulative volume profile where thick distribution blocks actually sit and where the drop-offs in volume are. Because the way that I like to divide this is, like, let's say we have one big distribution like this, right? When volume drops off on each end of this, what that suggests is that there are strong-handed traders that are helping price to sustain these regions, right? So these are areas of balance, and then these areas over here that are very low volume are areas of imbalance that price passes through them very easily. So I want to notice where the big blocks are, where they drop off, and where there could be minor areas in between for me to trade. So these drop-offs like this. So what I've done just now is I've created multiple different levels right now. So we have from the top to bottom, right? We have over here, let's say this is one big distribution. We have, you only quote the last 3 digits of Nasdaq. So 480 is the top band, right? I like to give it some wiggle room, about 10 points. 480, 470 is the top band. So what that suggests is that when you have a distribution block, right, the general premise of auction market theory is that when let's say these blocks are balances, when we are in the balance, right, price wants to stay at home, it's very, very happy. When it exits the balance, there's an expansionary stage. So price stays in this area 70 to 80% of the time, right? When it exits that 20 to 30% of the time, it creates a very strong directional move that either finds balance elsewhere or creates its own balance. So when price moves in like this, right, into this balance block, what generally happens is when balance is accepted lower from higher, there's bearish notation in the market. Likewise, if we accept lower to higher. So when we enter, right, when we have a situation like this and price exits the balance to the downside, the first thing to do is they're going to want to see if we can actually hold to reject the acceptance of this balance, so it's not necessarily that bearish. So when I'm looking at this, right, I understand that this is a big general distribution block, and within we have minor distribution blocks that hold some kind of, right, support resistance. We've just recently exhausted resources. Yesterday, we ran through and accepted 1 and 2 big distributions. So in my eyes, this is a very bullish notation. I'm just looking for pullbacks for prices to continue on the long side. So I was very eager to understand what happens at that 510-ish area, 515 on Nasdaq over here. right? We kind of held it, but the main area to watch was over here, right? So both these areas, even if you try longs on both of them and you're trying to pick them up, right? This one I think delivered about 30, 40 points. This one delivered 220 realistically. So regardless, right? If you get stopped on one, you try the other one, and that kind of helps you out. But it's not just, oh, let me just try and see what the hell happens, blah, 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 blah. We can further advance our understanding of which area is expected to hold support or resistance based on these larger distributions. So when I'm looking at these larger distributions, right, and I know that we've accepted into these blocks and we're holding higher than them based on where this auction is, I can start understanding what happened on every individual session to give me a clue as to what might happen on the following session, and so on and so on and so on. So this session doesn't exist, right? All we have is the overnight, we have the prior day, right, and so on, and we have these big blocks. So what happens on the overnight session is we create on the TPO a poor low at this area, and volume sustains in and around that 480, right? So that's great news for me. That's the area I wanted to see anyways. It's the regular trading hour session. I want to be long this block to avoid price from accepting even lower. Now, I get even more information from the prior day because this long red area, right, is going to be an unfinished auction that would typically get cleaned up for prices to go. What happens from a market participant situation here is prices rally very aggressively, and when they start rallying above this level, that creates this single print, right, which is a very quick movement, the start of one at least. What happens is that volume is very low because it creates a very fast move. So there's not that many like very strong buyers trying to hold this out. So theoretically, from a market participant standpoint, it'd be very beneficial to come back, clean this up, and then get those strong-handed buyers to step back in once this thing's cleaned up. So yeah, the single print and the cleanup is a bit lower. It can find itself at 450, but I like the area over here so we don't accept into the distribution that low, plus the single or the poor low from the overnight session allows me to identify an area where I'd be comfortable getting long, risking about 20, 30 points to see if we can accept back above this 520, accept above this 580, 560 block, accept above this 630, 640, very, very major resistance and distribution. And now we're going to be targeting the 720 and 730, which happens to be my upside target on the day, as I'm still running one singular lot on the long side on Nasdaq. So when I'm looking at this, right, it gives me all of that information. So even when we fall and fail over here at this top region, right, around that 630, 640 major ledge and distribution, what I can see is from the overnight, we could potentially see a failure down into this area based on, right, the prior TPO naked value area high with the combination of very thick volume that opened up in that area. This is another thing that I want to mention. When you have green and blue volume, it suggests it's very thick, especially when it's outside of the value area. This represents a very strong resistance or support, and it represents top heaviness in that market. If we're at the highs, if we're at the lows, it represents bottom heaviness right down here, which helped us spring very aggressively. So now that we've cleaned up a lot of this and we're through these areas, you can see that the thickness of volume, value area high, the start of this low volume presents itself somewhere close to that 640 massive area. So if I'm a buyer and I want to continue this leg, I want to see prices pulled down into it so we can get that next extension higher, right? If I'm not in this long already, because I'd be targeting somewhere here or very close to it, about 15, 20 points away to get that next clearance higher. So you can bring this, right? You can take this information from any standpoint, any day, and get a very solid breakdown, right? So for example, we have a very weak day on this session. We close at these lows, right? We close at these lows somewhere around that like 480, 470 region, right? We close at those lows, and what would have to happen realistically is a rally off of that area to continue this leg higher. But, right, the overnight session, what happens is that we accept into the distribution lower. right? We create a lot of volume at these highs, and we've generated a strong resistance over here, and prices open up over here. And right over here, what we have is you have this very powerful resistance based on a single print and the ledge of this volume profile around 410 to 420. So the fact that we've accepted lower that aggressively is telling me that initially I want to sell into here or into the top of this distribution to continue that leg lower. Right. So let's reiterate. Let's rewind this a bit. First and foremost, we understand on our 50-day profile where we stand, right, in terms of these big distributions, where said big distributions are, and where within those big distributions you might have some very key ledges. Are we within the balance, right? Let's draw our little block. Are we within or are we outside of the balance? That dictates the movement. And then where are our ledges, right, as we come into that area? So if I've rallied into a big distribution, where are my areas to support price? Because I want to be continuously long if I'm rallying into a distribution from below. If from above, where am I looking for the short? Where are those key areas? Then, right, I take a look at the individual sessions, especially the past ones, to give me more information. So the overnight, the prior day for this current regular trading hours. Do I have a very low auction area that I wouldn't mind completing on the overnight before I get that rally, right? Do I have thick volume somewhere? Do I have single prints to help me? Are these things aligning so I can find a key area for me to get in on that long side? It's a very, very important question. So we piece all of this together, right? We get something like this, where we have a long opportunity into this 280 here, barely any heat. I think I took about 10 to 15 points of heat. Took some profits at the key areas at the 520 on the NAS, and then another one into this 580 naturally. And I was thinking about this 630 because we tested it multiple times. And I say, you know what, I'll leave one of my stops at a bit lower than the first entry and see if we can get this continuation on the upside realistically. And this is what we've come up with, right? We've come up with this very, very large mover here on the Nasdaq that's up over 220 points at this point, right? It keeps running, and we have this entry somewhere all the way down. Cut this part until we get to the area. And we have this entry all the way down here, right? The average is 84.5. So, right, you see this, not that much of a risking about 25. That's the last lot, right? I bought some at the 70s, but risking about 30-ish points, 25 points for this massive rally. So yeah, of course there's risk on it, but generally speaking, when we have our plan, our setups, and our trades, it makes a lot of sense, right, to try these areas just based on this very simple strategy and tool system, understanding auction theory and understanding where volume actually sits. Now, this can be applied to pretty much any asset, if you will, but this is one of the main ways that I trade Nasdaq. If you guys want more information to trade Nasdaq, just drop comments down below. I can make an order flow video for you as well on looking at Nasdaq and trading Nasdaq and maybe something else. So if you guys enjoyed this video thoroughly, right, hit a like, hit that subscribe button, share it with your friends if they want to know how to trade Nasdaq a bit better and understand the risks of Nasdaq, because that's one of the main things that I mentioned right at the beginning of this video. And check out TradeProAcademy.com, where we have Nasdaq on a day-to-day basis, right, and trade it very frequently. So I'll see you guys in the next video.